One is the municipal market has been growing, and within that, the separate account market has been growing tremendously. So the market for holding bonds in separate accounts away from mutual funds has been growing significantly, but also the issuance of municipal bonds have been growing. You mentioned like, kind of what are we betting on, right? We're investing, we're lending money for all of these projects, for bridges, for tunnels, for the borrowers are many, right? Um, and so we're lending money, um, and we're getting paid, a reasonable return of 3% tax exempt, through a little over 3% tax exempt. And yeah, the default rates are very limited. It's a very slow, sometimes a company, a corporate entity, famously Enron goes from, a wonderfully well-regarded company to zero quickly. It doesn't happen in municipalities. It's like because of the flow of information, it's a very slow moving process. And when a municipality goes from investment grade to below investment grade, we get out of it. We're not holding it beyond, if it's a credit worthy entity. So we're diversified, which helps us protect against default risk, but the risk of default in our strategy is extremely low. And the credit rating agencies spend a lot of time evaluating around that. Um, and
You still
but
do yours, new entrants. You still
New entrants. Yeah, new entrants. So it's interesting about what we're doing, and we use the language of execution alpha and liquidity providing, right? It's going to be new, and I saw this in equity direct indexing, right? I was first exposed to early equity direct indexing in the early 2000s, and now people still talk about it like it's a new thing, because people are still getting exposed to it over 20 years later. So I feel like that's where we are. This is a new thing, a new category that we're talking about. And new firms will come and it'll become a category. It'll be things that people talk about, and it'll be the kind of company or strategy that people are going to want to get access to, either through licensing our technology or buying our company. And that's where we're headed. And I spoke earlier about distribution and relationships, but the big asset managers, they have great relationships, right? They have teams of people that cover every private bank, or every large private bank. And that's eventually where we need to be, is part of a large asset manager where there's teams of people that can go talk about our strategy. Either because they're using our technology because they've licensed it, or because they bought our company to use the technology and distribute it.
is excellent because that was exactly where my last questions were going about where you see Lancaster in the future. Maybe if you want to talk a little bit about your next fundraise and what you're going to build in the near future and finish on the further future. Are you still a company growing? What you want to become when you grow up? Uh, I think I say, uh, and that would be the last word for this.
So yes, so we're raising money right now. So we're doing our seed round. So it's our third capital round, because we did an angel, a pre-seed, and now a seed round. And that's going to get us to profitability. So the plan is to be at profitability, to be cash flow positive by July of next year. And then from there, um, the next step from a capital perspective is to talk to strategic investors, that can help us grow, scale, etc. And then in terms of what we're building, where our technology is pointed towards, it's pointed towards keeping our algorithms fresh and ahead of the pack. So back to people following us, we've got a nice head start. We'll stay ahead of the pack. And then secondly, building to scale, automated processes, agentic based portfolio management, development, etc. And that's kind of the focal point of our development team right now.